Chai, welcome to DSR Consulting, where strategy meets success. In the Tfsa Part 2, we discussed about the tax-free savings account and its features. In this video, we'll continue to understand the other aspects of tax-free account. So, let's dive in. Need to withdraw from your Tfsa? You won't pay a penalty, but there's one rule you need to know. You can withdraw anytime tax-free. However, the amount you withdraw gets added back to your contribution room, but only in the next calendar year. For example, let's say you withdrew $5,000 in 2024. In 2025, the withdrawal amount of $5,000 will be added to your total contribution limit for 2025. Don't recontribute in the same year unless you have extra room. Otherwise, you might over-contribute and pay a 1% penalty per month. Can a non-resident have a Tfsa? Moving abroad? Wondering what happens to your Tfsa? Here's what you need to know. If you leave Canada, your Tfsa can stay open and your investments can still grow tax-free. But no new contributions are allowed once you become a non-resident. Penalties apply if you contribute while non-resident, 1% per month on new contributions. Also, if you plan to leave permanently, consider withdrawing your funds and closing your Tfsa before moving. Can you inherit a Tfsa? The answer is yes. Tfsa inheritance options, successor holder. If you name your spouse, common law partner as successor holder, they inherit your Tfsa completely tax-free without impacting their contribution room. Beneficiary. If you name someone else, like a child friend or a relative, they get the money tax-free, but it doesn't stay in a Tfsa. Also, you can add multiple beneficiaries to your Tfsa. Pro tip: make sure to update your Tfsa beneficiary information with your bank. Should you max out your Tfsa every year? It depends. If you have extra savings and want tax-free growth. If you're investing for long-term gains. If you don't need the money in the short term. When you shouldn't max it out, you have high interest debt, pay that off first. You might need cash soon. Tfsas are flexible, but withdrawing means waiting for next year's contribution room to reset. Should you hold US stocks in a Tfsa? Thinking about buying US stocks in your Tfsa? There's something you need to know first. US stocks can grow tax-free in a Tfsa. No capital gains tax, and therefore good for long-term investing. However, US dividends are taxed at 15%, even in a Tfsa. Unlike an RRSP, there's no tax treaty protection in a Tfsa between USA and Canada. Pro tip: if you're investing for growth, not dividends, US stocks can still be a good option in a Tfsa. Think you know everything about Tfsas? Let's bust some common myths. Myth 1. Tfsas are just for saving. Nope. You can invest in stocks, ETFs, bonds, and more. Myth 2. You lose your Tfsa room if you don't use it. Wrong. Unused room carries forward to the near year. Myth 3. Tfsa withdrawals don't affect contribution room. False. Withdrawals only reset next year. Myth